My first answer is always, it's always a good time to hedge. There's really never a bad time to hedge. The difference is how expensive is that hedge. And what I'm going to argue here is that we've seen the VIX fall dramatically over the past, let's say, 6 weeks, peaking more or less right around Christmas time and falling pretty steadily ever since. And now at the time we're making this video, the VIX had a handle of 14, which is getting back down, not quite to the lows that we saw a year ago at this time before volatility exploded, but getting back down to the levels where you have to wonder, is volatility a buy rather than a sale? And so without getting into specifics, what I'm going to say is a low VIX means that protection tends to be cheaper. And so when you have the combination of a very sharp rally, we've essentially had a V-shaped bottom. We had this sharp decline, November, December, sharp rally, January that's continuing into February. Those V-shaped bottoms just don't sort of happen and go away. Markets do retrench themselves. And so what I'm saying is if you think that we've come a long way in a short period of time, which I will argue that we have, and it's relatively inexpensive to be executing hedges as evidenced by the low VIX, then one should really start to consider whether it's time to be considering some hedging strategies. Again, I think it's never a bad time to hedge because markets have a way of surprising you. The strongest uptrend can reverse abruptly. The strongest downtrend can reverse abruptly. Stocks that are doing nothing, some sort of news comes out of nowhere and moves them around. So it's really never a bad idea to be hedging. It's certainly always a good idea to be monitoring your risk exposures and putting in the back of your head that low probability events don't always happen. Well, don't always happen when you think. Most of the time they're not happening, but they always do happen at some point. And so what I'm going to argue here is that with this rally we've seen, if you've got some profits year to date, that is wonderful. I'm thrilled for you. But we're starting to get into some levels. That 2,800 level is viewed by many to be some major resistance on the market. Perhaps when you see volatility priced at much lower levels. Getting back to levels that were not necessarily at the all-time record lows, but starting to approach them, I think you may want to be considering whether you should be locking in some hedges on some of your well-deserved gains.